Welcome to a lesson on taxation of employment income. And today we have a question here which reads, Mr. Rampa is an auditor working for Tarifa Limited. He reported the following benefits for the month of January 2019. The basic salary was Kenya shillings 20,000 per month. He was provided with a motor vehicle of 2,000cc, which was acquired by the employer for shillings 2 million. The company provided him with a security guard and a cook who were paid 4,000 and 5,000 shillings per month respectively. He received the following allowances. We have entertainment of 5,000 for the month of January. Then during the month of January, he received out of office allowances of 3,500 per day for a period of 5 days. The employer provided him with a full furnished house, and also we are told that the cash for furniture was 200,000. His water and electricity bill averaging 2,000 per month and 3,000 per month respectively were paid by the employer. Then you are told required. Compute the taxable income and the tax payable for the month of January 2019. We also provided with the tax rates and other computations that are required for this question here. So in that case, let's go ahead and compute the taxable income, and you shall see that taxable income is usually given by cash benefit plus the non-cash benefits. So in this case, we start with the first point by discussing one point by the other until we are done with the last part there. So we start with the basic salary, and basic salary is usually a cash benefit, and we are told that this person was given 20,000. And the next point says that he was provided with a motor vehicle of 2,000cc, which was acquired by the employer for shillings 2 million. So you should say that in case of a motor vehicle benefit, remember this is a motor vehicle benefit, we usually consider the higher of. Here we have to consider the higher of. Number one, we have to consider the higher of 2% because it's monthly, 2% of 2 million, 2% of 2 million. And once we compute 2% of 2 million, we usually get as 40,000. Then number two, we have to consider the CC ratings. And in this case, we are told that it is 2000cc. So you just go to a schedule and see what is the amount for the 2000cc. So in case of 2000cc here, we can find that monthly is 7,200. So we just indicate 7,200. So we have said that we need to know the higher of, and between the two, 40,000 is the greatest. So you just pick the highest there, so which is 40,000. So that is in case of motor vehicle benefit. Then we move to number three. The company provided him with a security guard and a cook who were paid 4,000 and 5,000 per month respectively. This is in case of security and also the cook. So this is an uncash benefit. So here we are talking about the salary of two people here. One is a security guard. The other one is a cook. And for the security guard, you are told that this person was paid 4,000 shillings. Whereas the cook was paid 5,000 shillings. So it seems that the cook was receiving more than the security guard. Then the next point, you're told that the entertainment, he received the following allowances. That is the entertainment for 5,000 for the month of January. So this is some cash he received there. So this is an entertainment allowances. And an entertainment allowance that was given to this guy was 5,000. So the employee received an entertainment allowance of 5,000. So the next thing is that during the month of January, he received out of office allowances. So that seems that this is a per diem. And in case of a per diem, we usually say that the first 2,000 is not taxable. The first 2,000 per day is not taxable. So in this case, this person received 3,500. So we have to deduct the first 2,000 which are not taxable. Then we multiply all that by the number of days, which are 5. By the number of days, which are 5. So in that case, you find that the difference is 1500, and 1500 times 5 gives us 7,500. 7,500. Then we can see that the employer was provided him with a fully furnished house. So we are going to have some housing benefit. But before that, we are told that the cash for furniture was 200,000. So in that case, we have to consider the issue about furniture. And for furniture, we usually say that we have to check our schedule here. And we say that in case of furniture, it's usually given that provision of a furniture is 1% of the cost of the employer. The cost to the employer, which means that that is 1% of the value of the furniture, which is 1%, and the value of the furniture was given as 200,000. So in that case, we're saying that the value of furniture is 1%, and this is 1% of 200,000, 1% of 200,000. And once I compute that, I'm getting that 1% of 200,000 is supposed to be 2,000. It's supposed to be 2,000. So in such a case, we move ahead and say that we are given also the water and electricity bill. So in case you have to talk about the water and electricity bill, we usually look at the prescribed and also what is the actual. So the prescribed, that is the prescribed by the commissioner, and also the actual, the actual. So the higher of the two is what you're going to consider. And what you can see is that the actual is 2,000. So you just go to a schedule again and see what has been prescribed by the commissioner in terms of water. And we find that in terms of water is just 500 shillings. So we indicate here 500 shillings. And the higher of the two is 2,000. The higher of the two is 2,000. So we just compute it as such. Then we go to the electricity, and the same case appears. Electricity there. And here again, we have to compare the prescribed and also the actual. And you can see that what I was paid is 3,000. So that is the actual amount. And the prescribed amount, according to the commissioner, in terms of electricity, we are told is 1,500. 1,500. So once we compare the two, whichever is higher is what we have to consider in terms of taxable income. So we see that electricity, 3,000 is the highest. So that is what we take there. And I think from there, we have nothing else except the housing benefit. And the housing benefit, we usually take 15% of the total employment income. And in that case, we take the basic salary and add other allowances. So in this case, we just have to add this and get the total employment income. So we have the sum of, from the beginning here, we have the salary, the sum of these amounts here. And we find that the total employment income, total employment income is adding up to 88,500. 88,500. So you can just underline that to show that is a total. So, and also bold this one here. So then the next step is to look for the housing benefit, which is 18% of that value. So housing benefit, this person was provided with a house, so there's a benefit there, which is 15% of 88,500. 15% of 88,500. And once I compute that, I'm getting as 13,275. 13,275. So again, I have to underline that and get now what we're calling the taxable income. So this is now what we call the taxable income, and that is what the question was telling us, to look for the taxable income. And now the taxable income is equals to these totals here. That is 88,500. You add to 13,275, and you get the answer as the taxable income. In this case here, we find as 101,775. So the amount that is supposed to be taxable in this case of this employee is 101,775. But the question tells us we have also to compute the taxable, the tax payable, or what we call the tax liability. And in that case, we have to consider our schedule that we have been provided here. That is the tax rate, and we have been given the BADs, the annuals, the monthly, and the rates. So we are told on the first, for the month case, because this is a month question, 24,000. On the next, 8,300, and so on and so forth. So in such a case, now we have to see from a certain amount here, we are saying from the first, this is from the first, to what amount? We are saying to 24,000, to 24,000. Then we have to see what amount is chargeable, and here we say that the taxable amount, in this case is just the 24,000, which is taxable amount, and the tax rate we have been given there is 10% for the first one, and also we have been told now to see what is the tax charge so that we can be able to compute the liability. So at first we have those items there. So we can be able to see there. So the first, we have seen is 24,000. So for the next should be 24,001. So that the other point is that we have to have for the next 8,333. That is what we have been told here, 8,333, and we can find it to have a figure. Let me put them in terms of a minute. Yeah, there we are. So in that case, we can see that we are given some figures there. So we need to know what is this amount here that you're supposed to compute. That is up to what point? It is 24,000 plus the 8,333, such that we have to have is equals to this amount here plus this amount here. Find it there, and that gives us 32,333. So in case we want to have the taxable amount, we just have to less 32,333 minus 24,000 gives us 8,300, and the percentage to charge there is 25%. So now from there we move to the next one, which is on the next, which is 32,334, and now this is the final part. So we have to go to 101,775 according to the amount that is taxable. So that gives us the difference there, and the difference here will be this amount here minus this amount here. That is what gives us the 30%, or what should be charged here as 30%. And with that, you can be able to compute now the tax payable before relief, before personal relief. Remember, this is a resident person, so there's a personal relief there. So we can be able to compute that tax payable by computing that this is 10% of 24,000. 10% of 24,000. That gives us 2,400, and now we can be able to have the rest. And we can be able to see that this person is supposed to be charged each and every level at that point there. Then we get the totals of the amount that are being charged. So we have a total there of 24,000 until 20,833, and there we get the tax payable before personal relief, the tax payable before personal relief. But now, what is the personal relief? So we have to deduct the personal relief. So less personal relief. And once you go to our schedule here, we have been told that for the monthly, the personal relief is 2,400. So here we have to deduct 2,400, and you find that 2,400. So we are deducting there. So 2,400. So that now we can get what is the tax payable. And now the tax payable is this figure here, 25. So we have to have a sum of deduct from 25,000 and 24,400 there. So we get that the tax payable for this person, or what we call as tax liability for Mr. Rampa, is supposed to be 22,916. So with that, we have been able to compute the taxable income and the taxable payable according to the month of January 2019 for Mr. Rampa. I think you have learned something. Thank you very much. We meet for the next session. Thank you.